Gautam, morning. Thank you very much for joining in. It's Amina. Budget date has been announced July 23rd. Markets have gained significantly in the last couple of weeks. Bank Nifty was leading from the front, but there is signs of tiredness on the index. But luckily, we've seen sector rotation. Start with how you feel about the Nifty at these levels, 24,300. Will 24,500 be around the corner in the near term? And also a medium-term outlook on the index, and also if you have a view on Bank Nifty, which has been the star, at least of late.
Good morning, Samina. Well, yes, I think these markets have run up quite a bit. It's been a fairy tale-ish move in these last few weeks post the June 4th verdict. And I think what I've particularly liked is the maturity with which this market has gone up, because before the 4th of June, it was the mid caps and small caps which were actually running away. And post the 4th of June, we've actually seen a big comeback in the large caps, and that has really propelled the Nifty 2,000 points higher from where it was that particular day. Even at current levels, there are no serious signs of topping out. I think the market is still looking quite firm, at least on the large caps and on the indices front. But if you look at the mid cap and the small cap basket, I think there are some concerns. And looking at the breadth studies, I get the sense that the market could be preparing for a sort of a shakeout in the mid caps and the small caps, basically the broader markets, because I think they have run ahead of themselves and the charts are not supporting them anymore. But coming back to the Nifty, I can't give you any lofty targets because you are at a point where you have to take it 1 week at a time. Our working target has been 24,600, and there are a lot of studies which are indicating some resistance there. So we might just take a step back closer to 24,600. But if you have to take a medium-term view and post the consolidation, expected consolidation and shakeout, if I have to give you a number, I think the next stop for the market is around 25,500. But I think please do not spend too much time on levels. I think the trajectory is important. The trajectory is up. Be prepared for a 3-4% kind of a pullback at any point of time. It's earnings season, you have the budget, and all of these global factors will also come into play. So on an overall basis, the market is firm, but sticking to the large caps from here, I think would be the key.
So then let's not waste any more time and talk about very specific stocks, right? Gautam, in your chart reading, what are those stocks that are standing out for a long trade at this stage? So if you had to go out and buy something, keeping the recent price action in mind, what are those 3 or 4 stocks that you're constructive on at current market price?
Well, we can talk about themes, and for us, it's financials. I think we've seen a fabulous rebound in financials in the last 3 weeks, and I think this is a trend which is here to stay. I think we turned very bullish on the Bank Nifty a month and a half back, and we gave a lofty target of about 60,000. So I think we believe in that target, and we believe that over the next 6 to 8 months, the Bank Nifty should get there. But don't just restrict yourself to the Bank Nifty. I mean, look at the NSE Financial Services Index, which is a good mix of banks, financials, NBFCs and insurance companies. I think that's a mega theme that is really developing. When I look at it in terms of valuation or the charts, I feel the top 2 or 3 banks, as we did an event together and we spoke about HDFC Bank being the trade for the next 6 months. That's worked well. Post the results, we've seen a bit of a disappointment, but I think the stock is ready for much bigger upside. We still maintain our targets of 2,000 and 2250, followed by ICICI and SBI that we continue to like. And in the NBFC space, I think Bajaj Finance, Chola Finance, L&T Finance, all looking very solid on the charts. Insurance, if you look at ICICI General Insurance, ICICI Pru, HDFC Life, they seem to have bottomed out as well. So financials, I think, is a key theme, followed by pharma, which we absolutely like. I think it's a fabulous setup. And whatever the market scenario, I think pharma index is going to see another 15% upside. And metals has been an old favorite. I know it's gone a little quiet in the last 3 weeks, but it's a matter of time before this sector comes back and also sees much greater upside.
Gautam, hi, good morning. Tamanna here. Just, to come back on HDFC Bank and from when we spoke to now, one would argue that it's a run-up, but the last 2 trading sessions have been a bit traumatic for some investors in HDFC Bank. Just want to get your view on HDFC, ICICI Bank, and then let's contrast it with an SBI.
Yes, Tamanna, I think traumatic is a very subjective word. I think a stock like HDFC Bank, when it goes up 40% and then it loses 7%, I think for some people it's very difficult to digest. But I think it's part and parcel of the game, because HDFC Bank moved like a mid cap and small cap, and look at the way it covered up for the underperformance. And mind you, it hit lifetime highs. So I think the time has come wherein these stocks, which were in hibernation mode for 3 years, will come back. I know results was a bit of a disappointment because the market was expecting too much from it. But post this pullback, I think it's going to do bigger things. And as I said, my working target is still 2000 plus plus. And I'm also looking at the two other top banks, which is ICICI and SBI. I think SBI had a good move last Friday, and I think it's preparing for 1000, maybe even a 1200. And ICICI Bank has been a very quiet, clean kind of a mover over the last 6 to 8 months. So if the banks do well, ICICI will also participate.
Just, wanted to get your take on the pre-budget rally that we are seeing, at least in rail stocks. We now have a date sentimentally that perhaps gives investors an opportunity to now, put those positions in place. Are you excited about railway defense even at this stage and these levels?
No, we are not excited about railway at these levels. Again, I was speaking to my analyst over the last couple of days, and I think in terms of valuations, I think many of these stocks are still cheap. Maybe that's probably the reason, they are doing well, and they have a narrative, they have a story behind them, and now you have an event, in the next couple of weeks. I would be very selective in the railway pack. I mean, there are a couple of stocks, which can still be considered. For example, an IRCTC, hasn't done as well, but I think it has great potential over the medium term. RITES, I think, has a very good longer term setup, and I think could do exceedingly well. But barring these two, I'm not very, very excited about the others because I think they've run up a lot. And for that matter, even defense. Honestly, we've taken a step back. As I said, we are going low beta now. We don't want to participate in high beta stocks anymore. I think the risks of taking aggressive longs at these levels are pretty high. So sticking to the large cap, sticking to the 4-5 sectors which I mentioned are better off.
Gautam, good morning. I wonder if IT can have a longer run after the small spurt that we've seen since Accenture numbers came out on the June 20th.
I don't think so, Neeraj. I think we have a neutral stance on IT. I know it's seen a very good move after 6 months of underperformance, but we are very clear that somewhere around 38,500, the IT index could potentially top out again. And I think there are still global headwinds. I think NASDAQ has seen a vertical rally and is also looking quite top heavy. And this whole debate about how AI is going to impact global IT and Indian IT in particular is still being discounted at the markets. So I'm not looking at IT as a 6 to 12 month trade. Yes, it's done well in the last 2 to 3 weeks. I think you should take your profits from a trading perspective and move to other sectors where there is far greater visibility.
Gautam, Thursday and Friday, I mean, Pharma has had intermittent moves, but Thursday and Friday we saw some pretty strong moves in not just the Sun Pharma and the Lupins of the world, which got a double upgrade, but also a Laurus, a Granules, a Divi's. So the API, CDMO players showed a bit of a move too. Very strong the last 2 days. Is this a start or do you see some resistances?
See, the outperformers were anyway doing well. The Sun Farmers of the world have been running for the last 20 months. Cipla has been doing the same thing for the last 18 months. What has happened is that newer stocks in pharma have started to participate. And as you rightly pointed out, I think the comeback of Divi's and Laurus, and it looks like a genuine comeback this time. People have been hoping that these two stocks do well because they were the poster boys of the last pharma rally. But now I think we've seen a lovely turnaround for both these stocks, and I see them doing well. I think a Divi's can easily do a 5,000. A Laurus can easily move up a 25% from here. Dr. Reddy's is among our favorites in the pharma space, and I expect that stock to gain at least 1,000 to 1,500 rupees from these prices. We recommended it last month as well. And the entire pharma index, I think irrespective of the market environment, if the markets are weak, money will flow into pharma. If the markets are strong, anyway, the momentum is very strong. And fundamentally, you can still build a case for greater strength. So I think another 15% on the upside, I think is quite likely for pharma. So one should be overweight.
Gautam, like you indicated the last time we spoke, you were fairly constructive on metals for the medium term. Like you mentioned now, there's a little bit of somber trade that we're seeing across metals over the last few weeks. Looking at the market conditions and the outlook, give me 2 or 3 metal stocks that you would still go long on, and also a quick view on gold.
See, I think metals is a mega theme. I think I've been talking about this for the last 9 months. A lot of stocks did exceedingly well. And the beauty of this market is that every time you have a large move and stocks turn overbought, they just go sideways. That's exactly what happened to pharma, and that's exactly what is happening to metals. And I think it's likely to come out of a multi-week kind of a consolidation. And once that breakout happens, our NSE metals index target is about 10,700. I'm still very, very comfortable with JSPL and JSW Steel. I think these two stocks will do exceedingly well going forward. We also like SAIL and NALCO, which has been our trade for the last 6 months. And I think both these stocks will do bigger things. So, and the return of China, the comeback of China, as everybody talks about it, and we see it on the charts, the emerging market back in a sense has come back very strongly in the last couple of months. And this is also looking like a structural trend. So basically what I'm trying to say is that emerging market pack might do better than the developed world. And in that environment, I think metals as a basket could do well. Coming to gold and silver, it's a huge trend. One should not miss this rally. We've been a bull for the last 1 year. Gold and silver went through a bit of a consolidation last couple of months. Nobody spoke about it. Last 2 days, both gold and silver has come back. We have lofty targets. I spoke about it in the event as well. I see gold at $3,000 at some point of time. I see silver moving to $35 and maybe even a $43. So that's 30-40% upside from current levels. So if you're taking profits in equities, which you should from time to time, go into gold and silver. I think you will generate alpha in your portfolio.
Very quickly, we've been debating over the last few weeks whether chemicals are seeing a rebound, and maybe it could be potentially a good time to start accumulating gradually. I see you go into a smirk when I said that. How do you feel about some of these specialty chemical names? I mean, Archean, a Galaxy, a Deepak Nitrate are all up 15-20% this month.
Yeah, I think they've been trying to do well for the last 3 or 4 months. There have been 3 or 4 failed attempts. This attempt is looking far more solid. And as I said, smart money seems to be chasing stocks which are good on fundamentals, which have seen valuation comfort since earnings has remained the same in the last couple of years, whereas the price have remained constant. And I think chemicals falls in that basket. But unlike 2020, 2021, you can't go out there and buy anything and everything in chemicals. I don't think that's the case. I think Aarti Industries and Deepak Nitrate have been on top of our list. So if you're looking to play chemicals, for now, I would stick to these two.
Gautam, I have one small question, and that is on gold. Splendid move. Now, if gold is constructive, can industrial metals also do the trick, or could they be under a bit of stress because there is a lot of uncertainty around China growth?
I think industrial metals would also do well. So it's an entire commodity bull trend that we are actually foreseeing over the next 6 to 12 months. In fact, I've been discussing about copper with a lot of clients over the last 1 month, and it looks like copper is also going to turn around and go back to its recent highs. But clearly, given the geopolitical risks that we live in today's world, I feel that gold and silver will be far better in terms of an opportunity. Industrial metals are more cyclical in nature, so it's very tough to get into a parabolic run for those commodities. But yes, I do see that entire commodity bull market playing out over the next 6 to 12 months. And I think this China, Hong Kong comeback, when I see the markets, it's very clear that this comeback is genuine. And I do see those markets doing exceedingly well. In fact, even if you look at Taiwan, you look at Singapore, it's now at a month high. So there is a very serious comeback which is happening in emerging markets.
Just Gautam, another space, and I'm curious to know how you think about it, is your autos, where there is a bit of a mixed kind of a view. There are concerns about inventory pile-up, etc., and already there has been a run-up. So how do you feel about the two-wheelers and the OEM space?
Well, over the weekend, we released our big picture report wherein we clearly put out that there are certain sectors in the market where one should take profits, auto being one of them. When you look at the chart, you've come to the point that the positives of the next couple of years is in the price of today. And I think that's the case for capital goods, that's the case for real estate, and that's the case for PSU in some sense, selectively. So I think these are pockets where one should take profits. I don't think they can keep running at the same pace. Whatever we had expected has happened. Right now, they're all in bonus territory, and everything is being painted with the same brush. Any market correction, and I think they can come off big. So these 4 segments which I mentioned, which have been the poster boys of the last 18 months, one should take profits.
All right. Thank you so much, Gautam, for speaking with us today. Always a pleasure.